G'day expats and welcome to another episode of Expat Chat. We're doing Expat Chat 35 today, and as those who are watching can see, I'm joined by my friend and colleague James Ridley, who's the Managing Director for the Australian office and looks after Asia and the Americas. And my name is Brett Evans and I am the Managing Director of the Dubai office and I look after the Europe, Middle East and Africa region. G'day James.
G'day Brett, how's your day kicking off? I know it's probably only ticked over 9 a.m, but how's it looking this week? Winding down, actually. You've only got one more day on your list.
I know, mate. It's sort of devil in the deep blue sea. It's great to have a Friday off and see everyone else working around the world on their social channels. But when we're working on a Sunday and everyone else has got the day off, it sort of goes both ways.
Well,
I actually enjoy it.
That's exactly right, mate.
I enjoy it. I enjoy it. You know, I think when we set up Atlas, we weren't very smart. You know, the concept of having a client in every country means that, yes, we have our designated days, but there's always someone online and there's always someone who needs something. So, as you and I both joke about, we work on any day that ends in Y because time zones and all that sort of stuff, there's no set standard hours for us. But, mate, it's a busy time over here. You know, Dubai is really booming at the moment. You know, there's been a lot of seismic changes from a residency point of view and estate planning point of view. I think we're undergoing a lot of change for the better. And now certainly Saudi's trying to compete against Dubai in terms of being the regional hub from a economic point of view. Only positives can come from that because Dubai or UAE, I should say, will want to lift their game when it comes to making UAE more appealing than Saudi and vice versa. So I think an exciting 5 years ahead for both regions.
Yeah, absolutely. I mean, obviously Dubai and I suppose the UAE, it's gone through a really good period leading up to that Expo. After the Expo, I suppose that's probably the question mark. What happens after that? And, infrastructure development, what other things are they going to host? I mean, you and I were talking off the call yesterday just about how Dubai and the UAE, it's just primed to host so many big sporting events. It really can, and it only really scratches the surface, to be honest. And we saw the T20 the other day. That was a great win. But I feel like they only really scratched the surface. Obviously, you got the GP very soon, Formula One, but they've got just incredible infrastructure to host these great sporting events going forward. It's a real surprise. And as you said, Saudi Arabia looks like to be, I suppose, spending billions in infrastructure development over the coming years. And it could be a really, really big player, to be honest.
I think the latest number I saw was something like $700 billion they're spending. And that's not including like Neom, which is the city on the west coast of Saudi. Yeah, there's a lot of big things. And even if they're half right, it's still a lot of money.
Yeah, it is. Yeah. I mean, and I suppose Saudi, I wouldn't really pick as a location for huge sporting events, to be honest, but it seems like times are changing.
Massively. They've got the Formula One at Jeddah, which is the next couple of weeks. They do massive concerts. There's a big concert right now they're promoting with more so on the DJing side, but it's pretty much all the top DJs around the world playing at one concert. They're trying to be seen as a destination. Tourism-wise, they're really pushing that. Alun, which a lot of people wouldn't know what it is, but most people know what Petra in Jordan is, where the temple built into the cliff face in Jordan. Saudi's got the same, and they're really pushing that right now as well too. And certainly, I've done a couple of trips to the Expo. Expo is currently on in Dubai right now, and I think Saudi spent something like $200 million just on their pavilion, and you can see every dollar spent. It is phenomenal, and it is a very much a pro. Visit Saudi. We are changing. We are evolving, and the narrative is quite good coming out of there. So I think we've got a lot of clients in Saudi that we work with and talking to them, and they're saying the rate of change that they've seen over the last 2 years has been huge. Whether it's dress standards for females, whether it's obviously females can drive now, but also too a lot of regulatory change as well, which is more softened the harshness of what the appearance of Saudi is. So it's going to be fascinating to see what happens there. Now, actually it happened just before COVID. You can get tourist visas now to Saudi. In the past, you could never get a tourist visa to Saudi.
Yeah, I would have thought the entry was pretty difficult, to be honest.
Yeah. But
To
now
get
you
into
jump
Saudi.
online, it's about 500 dizzies to get a multiple entry tourist pass into Saudi. So they want people to
Mm.
come in. They want
Yep.
people to spend money. And yeah, look, it's going to be, as I said, I find competitions always benefits the end user. And
Yeah.
if Saudi's going to, throw this down and have a crack at making them the destination in the GCC and Middle East region, I think it's great because, we get choices.
Yeah, well, that's right. And I mean, I think based on just the consults that I've been doing, and I suppose the team here in Australia have been doing over the last sort of, I'd say honestly, 8 months, there is a huge consensus that a lot of Aussies are heading overseas. There's a huge consensus that a lot of people are becoming expats in, say, the next 6 months leading into the end of the financial year. It did slow down during COVID because obviously of all the uncertainty, but now it's
Yeah.
just ramped back up, and no one's really afraid to head back overseas. Vaccinations have obviously washed through. Rates are really high in developed countries, and now it's just a case, living with COVID-19, that's fine, and going to go back and, chase that sort of, whether it's an expat lifestyle or just those long-term career goals. It's all happening again, which is really, really good to see.
It is. And I think that, I remember last week, there was just one day, I think it was last Wednesday, I spoke
Yep.
to 3 people in one day who are all moving to Dubai for the first time.
Yeah. Yeah.
Just one day. And there's a lot of that. There's a lot of work going on Saudi, a lot of going to UK. I think the floodgates will open come 1 Jan. Everyone will do their Christmas in Oz and then they're off.
Yep. Yep. Yeah, I agree. It's so easy to leave now, especially if you're in the southern states. Queensland is still Fort Knox, unfortunately, and it's just
WA,
a bit ridiculous. Yeah, that's right. Yeah, it's a bit ridiculous, but 18th of December, fingers crossed, that's when we're meant to be obviously a bit more relaxed. But
what are the chances of hitting that target? Was it the 80% vaxxed?
Well, today was the date that we were meant to hit 70, and we did hit that, so that's promising. 80% is stepping up a notch. So yeah, a bit of an unknown, to be honest, but I think obviously the reality will set in when businesses are turning away because you don't have sort of that digital certificate in your wallet on your iPhones or your Androids where it says your COVID vaccine certificate. So when people start getting turned away, that's probably when it's going to start setting in. I think Queensland might need to see that in person for the first 2 weeks because that rule comes in regardless on the 17th of December. I think it's 6 p.m. or at midnight. So it means on the weekend that, people are going to be getting turned away. You can't come into the premises. Sorry. We get fined by, obviously, the government, 14 grand, I think is the minimum fine for a business if they allow patrons to enter and they're not double vaxxed.
Yeah, it's tough. It's something that you need that catalyst to make you, that last 20% to get them across the line. And, to take it from 70 to 90. And it's the hardest bit and the slowest bit. You always have your early adopters, then you have your main adopters, but it's that last bit, getting people across the line. And unfortunately, what we've seen around the world is as people get through 70, it plateaus because people go, oh, everyone else is getting it. I don't have to get it.
That's right. Yep.
And it slows things down and makes it more difficult. So fingers crossed you guys can get there sooner than later and on time. And then normality shall ensue.
That's right, mate. Now, I wanted to drive our attention to today's topic. So, I mean, today we're going to talk about what is an expat financial planner, what it is that they actually do or what we do, our process, things that we touch and look after, and then a bit of a Q&A at the end. Before we jump into it, though, I thought you'd love to give us that rendition of a disclaimer.
Yep, the random rabblings of some guy sitting in the desert. So the information you're about to have the pleasure and the privilege of listening to, really, it sounds the same as Christmas carols. It's just waffle in the background. It's small print, size 4 font. Don't pay any attention to it. Don't listen to it.
Yeah.
Listen to us talk about all other things like T20 cricket and those sort of things. But at the end of the day, this is not financial advice. This is entertainment. And if you do need to have a proper chat about proper details, give us a chat.
Oh, yeah. Sounds good. Speaking of which, how good was that T20 win? I still can't believe the coach, Justin Langer, he's still in question as to whether he should still be the Australian coach. It's just I'd hate
no,
to be cricket Australia.
the boys. I mean, credit to both sides. You know, the Kiwis
Yeah.
put up a good target,
Yep.
and the Aussies came out and you know, gave it a good bashing. And unfortunately, the same company said for the Socceroos that played last night and lost. So they now need to win every game as well as beating Saudi, which is undefeated, to enter the World Cup. So I don't like their chances, to be honest with you. So we did well in the cricket, not so well in the soccer. I think maybe we should put away.
Fair bit of money thrown at those cricketers for winning. I think each player got 2 million.
Really?
Which, I'm pretty sure there's an article published in the Australian Financial Review about how as they progressed through each round, it showed how much money they each got.
Yep.
T20 obviously paying for Australia, but it's still sponsored by obviously some pretty big hitters. So good on him. But yeah, like I said, Justin Lang, I don't know why he's being called into question there. He's a good coach. He's a hard coach, tough coach.
Yeah. Look, I think they need to call him the question the Australian Socceroos coach, and maybe they need to get the Matildas playing for the Socceroos. You know, they do a better game.
Yeah, that's right, mate. Now let's dive into it. So what is an expat financial planner? I mean, you being over in the Middle East, you already know what type of, I suppose, other sales consultants you've got over there, what they promote. But an expat financial planner, you know, what is it we do? You know, what are we touching? How do we relieve a lot of stress of a lot of our clients?
I think it's a great question, and it's one of the reasons why we want to talk about today, because I think there's a lot of misconceptions and lack of understanding about what the role actually is. So I think let's address it on two fronts. What is a financial planner at the first and foremost, and then how does that work on the expat side? So on the financial planning side, a financial planner essentially wears a lot of different hats. You know, whether it's the tax financial advice side, the asset management side, all brought into one in a holistic sense. And a financial planner, their role is to meet with you to learn more about the problems you're trying to solve financially and those sort of things. And then at a 40,000 foot level, work out a strategy that encompasses everything, whether it's existing assets, intentions to travel or return. Like, these things are all moving parts that form part of that decision-making process. And then bring that down into a succinct strategy that applies to you. You know, by law, any licensed financial planner has to do what's called a statement of advice. And in layman's terms, that's like a financial plan.
Yeah.
When you look at the expat side is essentially doing that, but with the expat element to it. And as we call it, it's delivering what we call two-dimensional advice, where you're living, where your assets are, how those two commingle together, and how do you optimize the scenario that you're in, either to, you know, from a wealth creation point of view, or for some people, wealth preservation. You know, there's a lot of rule changes out there at the moment that really trip a lot of people up, and you don't know what you don't know. You can have good intentions in terms of saving money and doing this, doing that. But the biggest problem we always talk about with is Canberra, the ATO, HMRC, IRS, they don't put out an edict that says, James, beware of this. You know, the only reason we know about it is because we watch these organizations on a daily basis. So if they do release something, we're aware of it and we can inform our clients. You know, so to me, you know, financial planning is not sales. It's not a product push. There is an execution element to it as part of the recommendations, but overall, it's a review of circumstances, taking into account your goals, objectives, financial concerns, investment horizons, risk tolerance, risk appetite. Yeah, this all melts into one. And anyone who does a statement of advice properly, it should be like Cinderella slipper. It should fit that person and that person only. You know, you should never do a statement of advice that is the same for everyone else. And unfortunately, as we both know, there's a lot of sharks in the industry, in the offshore space, you know, that do it. You know, some in certain regions like Singapore, Hong Kong, Vietnam, Thailand, Middle East, that's sort of the hotspots. Malaysia is one of them too, you know, where it's all about product sales. You know, they'll do is and these people receive phenomenal sales training. Like, they spend a lot of money. So they know the concerns to put in your mind to, you know, sort of generate that fear. And
that's right. They know the pain points to apply pressure on when they're having those initial consults with you, and they really flesh that out and really make you, you know, sort of dwell on it. I guess you can almost kind of, they plant seeds, to be honest.
Yeah. And the biggest problem that we see with financial planners in the expat space, to me, is the lack of accountability. So just to sort of explain to folks what is behind us, from a dual license firm, we've got two regulators. The Australian regulator, ASIC, by far is the most regulated financial services sector in the world right now. Post the Royal Commission, everything it's going through. I talk to colleagues from different nationalities and different countries about what they do, and they look at us and like, how do you do that? Now, yes, it makes it a bit of a pain in the backside for us, but at the end of the day, it's good for the clients. What it means is there's accountability, there's transparency. When you go through and look at the legislative requirements, and look, it can seem a bit of a pain for clients to go through some of the hoops we have to put them through, but it's all there to ensure there's a process of rigor around the process. When we sit with a client, we just can't tell them, you should do this, this, and this, because A, we don't know what their risk tolerance is like. They may think they're a growth client, but they might be moderate defensive. And it is bordering on illegal for us, as you pointed out before, with best interest duty, that we have to have the client's best interests at heart and as part of that advice process. So much so that a client can actually sue us if we don't have their best interests in mind.
That's right.
Whereas no other country, has really the high-level framework of that. Certainly in the US, they have different phraseology. They talk about fiduciary responsibilities and stuff. But,
very common. Yep.
But now our fiduciary responsibilities are, 15 levels higher. I had sort of crossed swords with a gentleman a couple of years ago here who said that he's able to provide Australian expat financial advice because he did RG 146 many, many years ago. And I politely explained to him that many, many years ago, that was all that was required to provide financial advice. Now, I think it's important people in the background understand how financial planning is moving into a professional space, like a lawyer, like an accountant, like a doctor, and those sort of things. So in order for someone to be a financial planner and call themselves a financial planner from an Australian regulatory point of view, they have to have either a bachelor or a postgrad financial planning qualification. They have to sat an ethics course, which is a very big part of the Australian framework now. And also, too, they have to have done coursework in CPD. And CPD is continuing professional development, 40 hours per annum. So at that point, then you can call yourself a financial planner. A domestic financial planner. Now let's put on top the expat side. And, it's funny how we do see people pop up from now and then call themselves expat financial planning, but either they do it once a month for one client and they think, oh, this is fun. We can do this. Or they've done it, piecemeal over a couple of years and decided to segue into it. To us, this is not something you can be half pregnant with. It is all or nothing. You either do domestic work or you do expat work. If someone came to you and I and asked about Centrelink provisions, we'd ask them to talk to someone else. We wouldn't have a clue. No differently to if you went to a dentist and asked them to look at your feet. Now you go to a podiatrist, and it's the same sort of thing. To us, the expat space is so complex and so niche that there is no time to focus on anything else, and vice versa. For someone who just does domestic work in Australia, and we find this with financial planners, accountants, a lot of professions, they don't have any idea in terms of the complications and the moving parts between the two. So, and that's something that will evolve over time and they'll learn that. But, when you are selecting someone to work with, are you going to pay someone to do the research, then to tell the answer, which may or may not be right? Or you just going to pay with someone who just knows the answer straight away and can execute straight away and, the answer is right. So that's that sort of dichotomy between selecting one. On the international space, there is no qualifications from a educational point of view. None, especially in this region. So and look, to the US credit, they are winding back that sort of cowboy mentality on the financial advice space. They're scaling back commissions and those sort of things. But like I say to all clients, you got to ask yourself, who's paying for lunch? In our case, we are fee for service, no commission, which means that we're only paid by one person, that's the client. If someone says, I'm not going to charge you for this advice, it's all part of the process, then you know someone's going to be paying that person. And more often than not, it's going to be a commission from the products they're recommending. So when you're having those chats to people out there, when you want to seek financial advice, find out who's paying for lunch. That's the first thing. You know,
it's a really good point you make there, Brett, because I had a consult just the other day and, I was talking about our asset management side, direct shares, those sort of things. And the initial inquiry was just saying, well, how do you get paid? I mean, are you recommending managed funds? And then he said that with a real stern voice. And I just said, no, I don't really use managed funds, to be honest. We're using direct shares. I put it to him straight. I was like, why do you ask about managed funds? He's like, well, I've worked in the industry before. I know how you guys get paid by managed funds for recommending it. I was like, gosh, like maybe back in the 90s.
Yeah, 20 years ago.
I was like, maybe back in the 90s, but they legislated that that's impossible in Australia now. I was like, gosh, you've been scarred, obviously, by some previous advisors back in the 90s. But no, that's impossible now. That's completely illegal. Pretty common, though, when you're engaging someone that might be in Singapore or Hong Kong or China, where they're getting the upfronts and then the I suppose, the trail commissions off the managed funds. Couldn't believe that. That was ridiculous. But it was really good just to have that front call with him and say, no, fee for service, you pay us, we work for you.
You're the boss.
That's what we receive. That's right.
Yeah, and that's to me, everyone who comes to me and says, what do I need to consider when picking someone to work with? A, how they paid. B, qualifications. C, regulation. Those three things. That's all you need to find out. If they so much as mention the word Australia, unless they are on the ASIC, the Australian Securities Investment Commission Financial Advisor Register, do not talk to them, because they aren't licensed to talk about. They can tell you whatever they want to tell you, and you cannot hold them accountable for that because they're not even licensed. There's not the protocol in the background. You can't raise a complaint with the AFCA. You can't raise a complaint with ASIC.
Well, I mean, it's a good point you make, because plenty of offshore mobs, even when they're presenting to their clients, they will have wording in there which might talk about Australian superannuation. Yeah. They're even clever enough to dive into some of the rules. Oh, you can only contribute this to super, you can do that. And somehow they will segue that and say, you can only do that with super, but here we have this handy little investment bond where you can throw in whatever you want and it's tax-free, inverted commas, not the case. But they're very crafty when it comes to, I suppose, those sort of proposals. But again, it just comes back to those three key points.
I'll tell you how clever they are. I mean, they give you the perception that because they understand super, or according to the blog article they wrote, they understand super, that you imply that they're obviously licensed. They won't tell you that, right. So you just, and I'll mention super, and you can do this with super. No, this is better. From a consumer's point of view, from a client's point of view, customer's point of view, you're going, okay, well, this guy's talking about it, and because he's talking about both, he must know. No. Once again, come back to that sales training. They know all the tricks in the trade when it comes to how to plant those seeds and really sort of manipulate perception, because that's all it is. They just want you to sign up to a 10-year bond or a 25-year bond, for those who really don't have a conscience, and move on to the next person. There's no care and accountability in that process. And obviously we went through the incredibly difficult task of becoming dual licensed and dual regulated. And, we wouldn't have done that if we didn't think we could make a difference. And what essentially that does is gives our clients the utmost confidence in working with us, because there's a metaphorical gun to our head, or two guns, one from ASIC and one from the DFSA, with the hammer, cocked, because we have to do it. If we don't, we lose everything. The whole business goes tomorrow. Whereas these other people, I mean, there was one fascinating one. There's a company here, which I can't say who it is because, UAE defamation laws, but they're advertising that they've been achieving 31% returns every year for the last 10 years.
Oh, gosh.
And they're advertising on Emirates and on social media. And so when you fly Emirates, you see the ads. They have not been here for 10 years. they're not even regulated with any of the 4 regulators in the UAE. So that's what I feel sorry for the people out there trying to decide, because there's a lot of choice, and yeah, they spend a lot of money in advertising and communicating those right messages and those sort of things. But to me, it's just remember the 3 things: who's paying for lunch, what qualifications they have, and what regulations, who's regulating them. And unless it's first and foremost, unless one of the regulators is Australian, walk away, because they call themselves expat financial planners, but they will have a client base of 40 to 50 different nationalities. So they're not specialists in working with Australians. They're specialists, in inverted commas, working with Spanish, Dutch, English. They'll have all those things in there.
It's a good point you actually raised there, whether, when you're engaging, I've seen it before because I've seen previous financial plans from other advisors, and that when I've taken on new clients, and a lot of the time when they don't have any experience in dealing with expats, you can see it in the strategy. Deemed disposal isn't talked about around maybe shares that they already hold. They haven't given you any advice about the tax that you're going to be paying on your positively geared property portfolio. They haven't mentioned main residence exemption being abolished. They haven't talked about non-TARP versus TARP. They haven't talked about your insurance policies, validity. They haven't talked about all these things, or even providing some tax financial planning advice. Okay, well, are you going to claim any depreciation on that? Save yourself $1 there from tax. So you can pick that up pretty quickly. But one of the other qualifying questions you could always ask that advisor, oh yeah, okay, well, you're wanting to take me on. How many Australian expats do you actually currently have on your client book? If it's only 3 or 4, you're potentially putting yourself at risk for receiving not probably the correct advice. You want to pre-qualify them as well. So, that's another good question, especially if you're exposed to the offshore mobs where they're trying to sign you up and go, well, how many Australian expats do you actually provide that, or Aussies do you have on your book? Or do you only focus on people that are residing offshore and, don't technically require any, licensing rules? So always a good point to make there, and raising that, pre-qualify them. How many kind of clients do you have in this area or in a similar situation? They should be able to answer you pretty quickly.
Unfortunately, a lot of the guys in the Asia and Middle East region, they'll tell you 100% of the clients are Australian expats. That is a lie.
Yeah, I bet.
Just blatant lie. I've seen
things that probably get them into that bond.
It is. I've seen things in writing that people have forwarded to me, and I thought, no, he just didn't put that in writing. There's no accountability. There's none. Yeah. So if you're not working with someone who is held accountable, who has that gun to their head, they're going to say whatever it takes to get $1. And you're not the client. You're not the client. Remember, you're not the client. The platforms are the clients.
A good example today, I've received an inquiry, and that they're just asking very direct questions about, should I do this? Should I do that? It's really regarding and relating to super and contributions. I don't know enough about this person to even be able to reply to say yes, no, because one, I haven't been engaged. I don't know their full situation. If I say yes, it could actually cause significant detriment to them because I don't know how old they are. There's so much that I need to generally know when I'm conducting that review and providing that advice. So, unfortunately, for that person that's emailed, I'm going to have to go back and go, listen, I don't know enough about your situation. I have to move down to the personal financial advice route. And that needs to be provided through a financial plan. That's step 1. That's a must. That's part of obviously ticking all the boxes in industry in which I operate in, which is highly regulated compared to these guys that are going to give you a presentation, 20-page PowerPoint, and get you to sign the dotted line, and off you go. So,
I saw a presentation the other day, and this guy apparently said it was very thorough. It was a 5-page PowerPoint. And he said, well, what do you guys do? And I said, at a minimum, for basic advice, a statement of advice is 40 pages, but it can go up to 120.
Yeah, I was going to say, I think I presented one 2 days ago. It was about 118 pages, and then I'll admit, I'll carve that up into a PowerPoint so it's easy to digest for them, but that PowerPoint's still going to be probably 70 slides long. Exactly. So very different.
It is. Now let's move on to some Q&A, and going forward, we want to do very much a Q&A session at the end of every podcast, just to really provide you guys and girls with, a bit of a conduit of information that you can discuss. I think there's a lot of people out there who do have those burning questions, and we just want to provide a bit of clarity. Like we've said before, we cannot provide personal advice when it comes to answering these questions, but we can provide general advice and give you a bit of a framework in terms of how to consider those answers anyway too. So, James, what's the first couple of questions we've got?
Yeah, mate. So listen, this one has been sent in. It's honestly very relevant. And the reason why I say this is over the next 10 years, we're probably going to go through the biggest period of intergenerational wealth transfer. We really are. And very specific, a lot of expats' parents unfortunately will be passing away. And it's a case where we are going to see that shift in assets. So this is very specific, very relevant. So right now, I'm a non-resident. My parents are back home. I'm overseas. And for tax purposes, if they're retired and they pass away, does this mean their family home and any cash I inherit from them, I'll have to pay tax on? Or if I dispose of the house in less than 2 years, is it tax-free? So, straight away, cash. If you're inheriting cash, very straightforward. That we don't have a tax around that in Australia for inheritance purposes. Cash is cash. It's just passed over. I will add the caveat, though, depending on what country you're residing in,
spot on.
That's right. They might have some unusual inheritance tax laws around inheriting some sort of funds or assets from a foreign person. Good examples, probably the US, and the US generally will have reporting requirements. That doesn't necessarily attract tax, but you've also got to deal with the different state rules as well, which don't know them off by heart, it's too many. But some states might tax you on certain types of assets. But that's just a really good one. UK, if you're not considered domiciled, you're probably going to be okay there. But the other component of that question was if he's inheriting the family home. So they've lived in it, what are it? He's a normal Aussie expat. He's a non-resident. He does have some time up his sleeve.
Yeah. It comes back to episode 32, I think it was, where we talked about inheritance rules with for expats. To me, the biggest one is MRE, main resident exemption. Everyone in expat land knows it is the 6-year rule. And unfortunately, what that does do is if you want to inherit your parents or whoever the person passing on that inheritance to, if you want to inherit their main resident exemption, you're compelled to act within that 2-year period. You can't just, I'll do something in 5 years' time. Time's up, you've lost the main resident exemption, and then there's a nice little hefty CGT liability accruing in the background. So
yeah, there is. And you are paying capital gains tax rates at your foreign resident marginal tax rates. No tax-free threshold, 0 to 120,000, 32.5%, then 120 to 180, 37%, and then anything over 180, it's 45%. So it can be a huge tax bill if you don't act quickly. And sometimes, there are going to be emotional ties to that asset. So you might not sell it. You might just rent it out, but it's just making sure you're aware of the potential tax ramifications in the future. If in 5 years' time or 10 years' time, you go, you know what, I will sell that asset now and I'll use it for something else. Yeah, you're going to be up for a pretty large, hefty CGT bill.
It's like, sort of coming back to what we're saying in the previous session about, what does an expat financial plan to do? It's our job, overarching job is to help you make informed decisions. You're the one that makes the choice. You're the CFO, but our job is to make you make informed decisions. And that's where any professional could help, expat or not, make their decision. Just understanding the pros and the cons of the options available and working out what's best for you. You might decide to hold on to it. You might decide there's a high emotional attachment and you'll never sell it. That's fine. But at least you're aware of those considerations, those scenarios.
Yep, absolutely. Next question. This looks like the exact same. So I'll go on to the next one after that. Okay, again, I'm an expat. I'm a non-resident of Australia for tax purposes. When I reach 60 years of age, can I still access my super tax-free given the money in the super account was earned when I worked in Australia and was a resident for tax purposes? It's a bit of a 2 to 3 part answer, this one. So I'll jump into it briefly, okay? So at age 60, this is when most expats will now meet their preservation age. And that's when you can actually access something out of your super. If you are still working full-time, you are only able to access an amount out of your super through a transition to retirement account, a TTR, and you can access up to 10% as a lump sum or as an income stream. That's part one. Part two of that is that you do need to declare that income in your non-resident tax return. You will receive a 15% tax offset for that portion. But that amount is actually assessable as ordinary income, but you get the offset. So unfortunately, that does mean you'll pay 7.5% tax on the TTR income component or part two of this response. If we reach preservation age 60 and we are fully retired and you, I suppose, commence an account-based pension rather than a TTR, that is tax-free. So this would mean you're fully retired, not working anymore, you're just doing a normal account-based pension, whether you're pulling out a full lump sum or setting up an income stream, yes, that would be tax-free. And then I suppose the last one was, when I reach 60 years of age, can I still access my super tax-free? Yep. So if you are fully drawing down your super as an account-based pension and you are fully retired, met your preservation age, that actually is tax-free in Australia. You don't need to declare that in your individual tax return after that age. Probably the hardest thing and the hardest criteria that a lot of expats, or I suppose in general, is just meeting the definition of being fully retired. It is a bit of a grey area, and it is very typical that you'll need an accountant or financial planner to actually help you assess your situation and declare whether you are retired in full. It
is, and I think also too, a lot of people aren't aware that super is agnostic to residency.
That's right.
Whether you're a resident or non-resident, same rules apply, same taxes apply, same exemptions, blah blah blah. It's the same. So whether you're in Sydney, Hong Kong, Singapore, New York, Dubai, London, if everyone had the same super account, same regardless of jurisdiction. Difference is on the other side, the two-dimensional side. So how does HMRC treat it? How does the IRS treat it? How does Inland Revenue Service treat it? And so on and so forth. So, the short and the long answer is, I guess what we're trying to get to is, yes, you can get it, but it'll depend on how you draw it down. A lot of folks also forget too that when it comes to flipping over from an accumulation phase account, which is what you have in that working phase of your life, into a pension phase of the account, there is a minimum drawdown. So once you hit 60 and you hang up the boots and said, rightio, I'm flipping my accumulation super to an allocated pension, then by law, you have to draw down a minimum of 4%. Whether you want it or not, 4% is coming out of the account to you. However, you can take 40% if you want. You can take 80% if you want. So there's no cap in how much you take, but by law, minimum 4% must come out of that account every year. And then as you get older, that percentage increases from 4 and up from there.
Yeah, that's right. And one change we saw last year due to COVID-19 and obviously how share markets were performing was the government stepped in and said, listen, we don't want you having to deplete your balances where the assessment of that balance was made in the 1st of July 2019. So they said, you can, it's okay with us if you only draw down half that required. So 4% went to 2%, 5% went to 2.5%, so on and so forth. It just stopped people drawing down so much when their account balance was obviously down due to how the market's been performing. Moving on to next question. More about insurance options, this question. So it's a hard one to answer. And I only say that because there are a lot of insurance providers which have tightened up on new applications, mainly brought about due to COVID-19. So it's a question just stating that, okay, for COVID insurance options for expats or insurance that includes COVID coverage. Not sure I understand the question. I should clarify, I wish to retire overseas. So based on this, that's actually all that's part of the question. So I'd say that they're trying to identify whether there are any insurance options which cover you should you, I suppose, contract COVID and maybe be out of action for a period. I mean, that would probably be just income protection of some sort, I would say.
I think it's important to delineate the different types of insurance. So there's your health insurance, which in the Australian equivalent is your Medibank Private and that sort of stuff. Overseas, it's like Bupa, Aetna, and so forth. So certainly insurance that covers COVID implies it's probably more like health insurance, which, as far as I'm aware where I sit, there's not a problem getting health insurance that does cover COVID. However, each country would be completely different. There's such a fractured approach to managing COVID that, it really, you'd have to reach out to a health insurer that, does provide that product or package in that region and make that question. If it's what we call risk insurance, which is completely different. Risk insurance is life insurance, total and permanent disability, trauma, critical, that sort of stuff. Then that's different because I know from an Australian point of view, the regulators actually mandated it was illegal to carve out COVID. So they couldn't go back and change the terms in that. So if you do have Australian cover, then more likely it will cover you for COVID. As you alluded to before, though, up until and during sort of Australia's Fortress Australia approach, because of those border caps and restrictions on entry, insurers in Australia pretty much put the shutters down on providing any new cover to any expats. And the reason being is they're worried about repatriation issues. I mean, if you have to repatriate someone who's claiming TPD, how do you get them in Australia with the border caps? So, and given the fact that we were faced with 4 to 6 months worth of waiting lists to get back to Australia, they couldn't manage the situation. So hopefully in the new year, 2022, insurers will revisit this now that borders are opening up for the majority of the country and allow that to occur, because we do have a list longer than our arm of people who are wanting cover at the moment and who can't get it on the basic fact that no one's writing new cover. If you have existing cover, that's fine, as long as they're aware that you're an expat and they know what you're doing.
Yeah, exactly right. Last question. This one I can somewhat address, but I'll let you have a shot. But would participating in a share purchase plan for Australian residents while overseas be fatal to a non-resident expat status? So I'll rephrase that just to clean that up a bit. Would participating in an Australian share purchase plan for a non-resident be fatal to that resident's tax status?
So let's look at it from 2 points. Just to explain to folks out there who don't have a lot of understanding on direct shares, if you own BHP or CBA or Telstra, and they offered you the opportunity to buy more shares. What's we call a share purchase plan. With these offers comes a thick document called a product disclosure statement or a prospectus. They sort of work interchangeably. And in there'll be key terms. And sometimes, and I think what they're alluding to is there's a term in there that says only to be accepted by Australian residents. Now, I think you'd have to be pretty unlucky for the ATO to classify you as a resident for tax purposes if you happen to accept the BHP share purchase plan. However, it may provide a gap in your armour in defending your position as a non-resident for the ATO to go in and try and find other things as well. Do you want that scrutiny? It's one of the reasons why very rarely do we accept any sort of corporate actions for clients, basically because we just don't want them open to scrutiny.
Well, I mean, taking that a step further, a lot of the time these share purchase plans, it'll have only set countries that they're available to. And obviously, if the client is residing in that country, they can't take on the share purchase plan. So, it's very rare that obviously that they can take it up, mainly be the fact that they're overseas. So,
well, most people have a local address, because that comes back to our conversation we've had many episodes ago about discount brokerages and how expats can't use them. And they'll use their mum's address, their sister's address to try and circumvent the compliance regime, which means they are offered these share purchase plans and all these different bits and pieces. So, it's something that, to me, it is a bit of a rabbit's hole you can jump down by doing something very simple. It can sort of expand out quite quickly. So, I think the best advice in that scenario is don't do it if you do have questions. You're right. It means sometimes it might include Hong Kong, Singapore, London, or the US. Actually, no, it never includes the US. So I've seen Singapore, Hong Kong, London are the sort of three main ones. You are going to need to read the fine print just to make sure that you're squeaky clean, because you just don't want that subjective review by the powers that be. No,
the powers that be, you don't want to go through that process of explaining, and just, I suppose, sticking your head in the sand, assuming. But no, I mean, I had a client that wanted to partake in, I remember a share purchase plan issued last year, I think, and they had a few countries on there, but they were unfortunately in a country, in the Middle East actually, where they couldn't take it up at all. And it was a good offering, but it was one of those rare opportunities and just couldn't do it. There was no way. And then they sort of put the pressure on the fact that, is there any way we can change my address so I can still get access to it? It's like, no, you know, you don't want to create a situation where you're just sort of potentially unhinging your residency. That's ridiculous.
Yeah.
Anyway,
it's Pandora's box. It's Pandora's box. So.
It is. It is a little chink in the armor. But mate, listen, I think we can wrap it up there for a good episode. Yep. Some good Q&A there. As always, guys, please do send in any questions that you'd like us to address. You know, we're happy, obviously, addressing this in a general nature. Ideally, it's just informing you, giving some guidance going forward.
So, so the ways you can do that, if you're watching this on YouTube, comment in the field below. If you're listening to this on a podcast, then just drop us an email, info@atlaswealth.com. Not very hard to remember. And we'll make sure we have a Q&A session at the end of every episode from now on. So those burning questions, no matter how stupid, we're not going to name and shame. So if you think it's a stupid question, don't worry, we're not going to call you out. I think if you've got this question, I dare say a lot of us have the same question. So don't be a stranger. Make sure you sing out. Appreciate everyone's time and attention today.
Cheers, mate. Appreciate you stepping by.
Mate, good to see you again, and we'll see you on the next episode.
You too, mate. Speak soon.
Thanks, mate. See ya.